Our next session takes us into the heart of market transformation, policy evolution, and the shifting dynamics of commodity markets. Please welcome Thomas Pieper, Head of Global Market Analysis at RWE, Supply and Trading, as he presents Energy Transition and Global Shifts, Impact on Commodity Markets.
Hello, everybody. So my name is Thomas Pieper. I'm heading the Global Market Analysis team at RWE. And I would like to present a little bit about the recent market developments. So what David, I think, already alluded to, the flying sharks, which are now around in our world, especially now in 2025. So as you all know, President Trump is threatening the world with his trade tariffs. Then, of course, we have still war in Ukraine ongoing, right? So no resolution so far, still ongoing in the same force. Also, yesterday, Istanbul, I think there was no real progress. And then we still have the energy transition. So as the sharks flying through the panels, maybe, or through the kind of wind turbines. So this is still ongoing. Maybe not to the same extent or to the same scale as some people expected, but of course it's there. And as we also saw, we had a very sunny beginning of May, right? So we saw, like in Germany, more than 50 gigawatt of PV generation, so which is a lot, right? And the system has to cope with it. So let me give you a little bit more insight here. So let's talk briefly about macro. I think you all read all these Trump tweets and all the kind of headlines. So it's a lot, right? So there's a lot of stuff coming through nowadays. And then we talk a little bit about gas, carbon power, and what does it mean for our commodity fundamentals, challenges. So I think also a little bit the headlines, which David already kind of described. So politics, regulation, and also investment behavior. Yeah. So I think this chart makes it pretty clear what is happening, right? Eurozone gross downgraded, so a lot of concerns. Ramp up of military spending is a topic. Then of course trade tariffs in Europe. Maybe we get more stimulus in 26. So let's see what Friedrich Merz does, for example, in Germany with lifting the debt ceiling and the debt package. Well, let's see. So, but on the right side, you can see what's happening in the US, right? So first, of course, there was some positive view when Trump got elected on the GDP. So tax cuts, deregulation, so went up over 2%, but now we see it is a little bit in free fall since Liberation Day, because everybody's, what does it mean, the negative impact of all these trade tariffs? And I digged out this nice economic uncertainty index. I don't know, maybe how representative it really is, but you can see how high this index now is. It is much higher than it even used to be at COVID times, right? So I think 8,000 points. So it is, of course, it shows that there is a lot of uncertainty and turbulence currently ongoing, as well as also the inflation outlook was also revised higher and higher for the US. You can see it for 25 now, much beyond the 3% nowadays, and also for 26, it is now close to 3%. But I think that sets a little bit the scene, what's happening on the macro side. So now, what does it now mean for gas? So what I show you here is the TTF June contract. So we saw performed quite well in the first 2 months until mid-Feb 25. So it went up to nearly 60 euros. And then we saw now a continuous dropping, touching near, it was close to 30. Now it's stabilizing around mid-30 level. And what I also want to show you is I put there explicitly candle charts, right? I think you are familiar with it. So it shows you also the trading range. So it also shows you that we had some of the days where the gas price was trading in a range of up to 5 euros. So it means that It's like more than 10%, 10 to 15%. And that also shows that how much kind of the market is, of course, driven by kind of not only the fundamentals, but also by all this market news which is ongoing. So especially, of course, demand is a topic, also for gas. Chinese demand is pretty weak right now, so they are not taking much LNG right now. Further macro worries, so we also did not have a pretty cold winter, especially now spring was pretty mild, so there was also not too much demand, so demand was underperforming. And then, of course, there's this whole topic about potential Ukraine peace talks. So, of course, you can read a lot about people saying, okay, maybe we see soon some pipeline flows again from Russia. I don't know, so I'm pretty skeptical about this. But for instance, US could also lift sanctions on Russian LNG. So all these things, of course, also they are not really tangible. And as you see, currently the peace talks are not really progressing well. But of course, that is impacting the market. And then last but not least, I think the third largest thing is, of course, the regulation. So what we had was during the Ukraine crisis, the regulated fill-in levels, and 90% until the end of October. And that was, of course, also lifting the price, especially for like this summer, for the June contract, because the market was concerned, how could this be done? But of course, they said, okay, there will be kind of market operator, like in Germany, THE, will kind of intervene and will fill storages. So by what any means, so buying gas somewhere, somehow. And this got lifted, and that we had, okay, then what we are seeing here right now is this kind of big down move in gas prices. But of course, as we know, still, okay, we are very much exposed to the global gas picture. So far, I think US LNG is ramping up quite smoothly. We saw some kind of nice ramp-ups, commissioning, black mines. Also now I think Golden Pass is on a good way. So we can still expect some decent kind of US LNG output. But of course, so recently there was a little bit of kind of news about Qatari trains, whether they are really coming online at the expected kind of time frame. So, but this also, of course, is still not. Yeah, we are still very much exposed to what is happening globally in the gas world, and especially also China, right? So Chinese demand, I don't know if anybody knows more. Would be happy to know more, right? So it's really tricky to get a really comprehensive view. We know they also have a massive renewable extension. They also maybe can replace gas a bit, but it is of course difficult, right? So they have some regions some provinces which of course have a lot of gas plants. Others are, or most of them are still very much coal dominated. But it's really hard to get kind of a good kind of outlook for the Chinese gas demand. Okay. This is another kind of chart which I like very much. It just shows especially the kind of impact of the storage regulation. So maybe it's a bit complicated. It shows the Q3 minus the Q1, so the winter minus summer quarters for TTF. And of course, usually they should be negative, right? Storage economics say, okay, there must be a premium in winter, so to make it worthwhile to store gas into store. And this is roughly usually between 1 and 2 euros. You can see it here. Last year it was like this, and also now it is again like this. But with all the kind of regulation, so the spread was massively moved and pushed upwards, even up to 8 euros. So in Feb, so that was eWorld time. I don't know if somebody was at eWorld. There was also where THE announced some interesting kind of concept, how they might fill storages. In the end, they didn't do. But what happened then afterwards is that the whole kind of storage regulation was revised, and now the kind of min fill level is relaxed from 90% to 75%, and also we have no more time, right? Which means now we have 1 month more time, so which means that now, of course, market relaxed again, and the premium moved now more back from summer into winter again. Okay. Oops. Yeah. So carbon EU ETS, of course, also very exciting still topic. So what's happening there? So you see a little bit a similar price kind of trajectory also when you look at the candles, very massive kind of candles. So the trading range per day, the daily trading range is also very high, so very choppy, very volatile, expressing the kind of also market uncertainty. So we saw also until February, carbon prices increased up to 85 euros, and then they kind of in mid-April were down to 60, and now are around 70, 75 kind of euros per ton. So here also we see the macro picture. So we have weak emissions. So everybody, I think, is aware that energy-intensive industry in Europe is not doing so well. So it's, of course, again, the whole affordability discussion. We have high commodity prices, high energy prices. So, and we are not yet back to levels that we had before COVID. So, and there's, of course, a lot of discussion because now it's up to the industry to abate emissions. So power kind of sector is nearly switched through. So we don't have so many kind of coal and lignite stations left. So they also have a clear path to exit. So of course, this is now also a big problem. And this means that also the carbon balance is usually pretty loose in this year. So, but the kind of construction of the ETS shows that, of course, it is getting tighter over the years. So that is, of course, done by the kind of linear reduction path in general, but also the market stability reserve. That is a special instrument which was introduced a couple of years ago, which means that if there is too many certificates into circulation, that's called TNAC, total number of allowances in circulation, then it is kind of reducing the number of certificates, and that is always keeping the kind of following years tight. And this is, of course, now also the case. And therefore, carbon is a bit tricky, because when you ask a carbon analysts are always right. Because there's these carbon analysts who are saying, okay, I'm bearish because this year balance is loose, so I'm bearish. But then you ask another one, he says, yeah, but in the end, right? So in 26, 27, 30, of course, it's really tight, so I have to be bullish. So of course, but really to see what is happening in between, I think that is pretty tricky. So, so that's a little bit the kind of paradox of the carbon market, I would say. And then, now it's up to the EU to decide on the 2030 targets. 2040 targets, 2030 is already determined, of course. So, and sticking to the kind of 90% reduction path, how to implement it in the system. So this is now starting. So the trialogues between the Parliament, Commission, and Council. So as you also might know, it's a little bit of a comitologic process in the EU. So this is now be interesting to watch and see how this will then evolve. There is also some interesting developments, maybe some kind of carbon offsets or carbon removals are allowed, so negative emissions, that could be interesting also to also push the kind of these certificates a bit more into have more demand for these certificates which come from the kind of voluntary market so far. So that would be interesting, but also, of course, there's more sectors, right? Shipping sector, aviation sector, they are ramping up. So there's lots happening there, and lots to analyze. But also affordability, a little bit the general skepticism. So is the decarbonization path the right one? Should it be maybe relaxed, prolonged? Of course, there's all these discussions. And we also know that Europe is also not kind of speaking with one tongue, right? So now we saw the Polish elections. So we are now also more an EU-critical kind of president was elected. And of course, the Eastern European countries are more critical towards a more tighter kind of carbon system. So we have to see how this develops there. Last but not least, what is also very important, especially for carbon, is what the kind of financial investors are doing, right? So they are also keeping usually a position, and they were pretty long, so also had this long-term view of a tighter kind of market. So this disappeared, and now it's a little bit back, but but this is also, of course, a factor which, especially for the carbon market, needs to be considered. Okay. So now German power. Similar, maybe boring chart, looks similar, but also we have a little bit the same kind of development there. As sure, power is very much influenced by gas and carbon, so it's no surprise. Also, fat candlesticks, right? So we see a lot of volatility, a lot of market uncertainty. So pricing above 100, now roughly around kind of 90 euros. So heavily backwardated with the kind of gas curve. So this is also clear. And I think also what David said, right? Renewable penetration is a big thing. So especially in Germany, we had a very strong PV build out, right? So we have now 100, I think more than 100 gigawatts of PV panels installed. So they are often combined with behind-the-meter batteries, so small kind of home storage batteries, which are also not optimized for the system, but optimized for the household, right? So to charge your car or favorably or for your own consumption. So, and this is of course also a problem because they are not really measured, right? As they are behind the meter, they are just kind of part of the demand. So then on the onshore and offshore build out, it's a bit sluggish, but also everywhere in Europe. So we also saw some failed auctions, like in Denmark, for example. So offshore is also, in Germany, still we are stagnating around 9 gigs right now. So, and onshore is like 60 something, 65 around. So it is definitely beyond kind of also the government targets. So, but it is ongoing, right, everywhere. Maybe more on the PV side, a little bit more on the onshore and less so on the offshore side. And then on the other side, of course, we have the increasing loss of flexible capacity, right? So we have a lot of coal, lignite exiting or having exited the market. And this is, of course, also stretching the market a lot because this is something, when we have Dunkelflaute, right, no wind, no PV, of course, there needs to be some flexible generation. And there, of course, we are waiting, especially in Germany, for the new tenders of the new government now, finally, for gas new build. So in the coalition agreement, they were talking about up to 20 gigawatts of new gas. And but as the old coalition failed in general, but also failed in pushing that over the kind of final line. So we are still waiting for that. But of course, the longer it takes, so the more critical it gets. And we also need these gas new builds to keep the coal and lignite exit timeline. All right. So spot market, of course, looks like we have nice, I think in the US they always call it nice duck curves, right? So we have the very extreme flanks, we have the PV penetration over day. You see kind of what does it mean. You see, of course, in the bottom, you see how now wind and PV aggregated. We see now in Germany the above 50 gigawatt, so it is combined with wind, but we had alone in the very sunny early 3 weeks in May, we had alone 50 gigawatts of solar feed in. But then you can see what happens to prices, especially when you are on a weekend. So we are usually dipping then also on normal days around 0. But then, of course, at weekends, you see then prices which are then can be massively negative. So minus 250 even was, I think, one very sunny Sunday midday. And this is, of course, also causing a lot of frictions in the system. But also you see this kind of shoulder hours, which can then be very high, right? Because the flexibility, the ramp-up requirements are massive to cope, especially with the evening peak. So especially when you are saying then 7 o'clock, 8 o'clock, now, okay, the daylight is getting a little bit longer, so maybe now it's a bit later. But this is, of course, then where everybody is coming home and so on, and where the demand is then surging, and there is then no PV feed in left. This was for now April, May. So now December, we saw, of course, a different picture. Sorry, the scale is a little bit difficult because we had one bigger spike, where prices were even kind of around 900 euros in 1 hour. That is, of course, when you see then to the kind of matching kind of PV and wind feed in. There was nothing, right? So it's also very rare. It's a very rare situation that there's really nothing. Of course, there is no PV at night, we all know that, but also that there's virtually no wind, right? So we saw really something, I think there were some hours which had less than 1 gigawatt of wind, right? So this is really low, right? So nothing was turning onshore, offshore. And this was then, of course, putting a lot of stress into the system, and you can see what then happens. But this was, of course, mid-December, so it was colder, it was no renewables. But when you then see what you have a similar kind of picture also then between Christmas and New Year, nothing happens, right? Because then the load is not there, right? We are in the holiday season. And you also see there a little bit of PV even. So there we even had a kind of clear sky. You can also see in winter now PV, which can be also kind of more than 10 gigawatt, right? So this is in a very narrow range, right? Because of the daytime length. Okay, so what does it mean for power market modeling? So, okay. We do it also with Plexus, right? So as David also said, we are. So how we are doing it, so that is our model for kind of the tradable tenor. Of course, you need to have all these inputs. You need to see what is really your scope. We are modeling really our kind of core markets. So Germany, France, UK, Belgium, Holland, Austria, Switzerland. You have to set your system borders. Of course, you have to then always think, what are you doing with the rest? Also thinking a lot, should we model the whole of Europe? But of course, if you really want to have a model in the for trading, right? You must be 100% sure that you have good data quality, that the data is coming in also, that the data pipe is stable. You want to have a daily overnight run. So we had various discussions about it. So far, we kept it like this because there we think, okay, the data quality is okay, right? So it is a big challenge to have, I think, what is under process, the first point, right? Have stable data flows and good data quality. I think that is still the biggest struggle for all analysts, I would say, right? There's lots of stuff happening from the IT side. The data source can be faulty, so you can have data format changes, all things can happen. Also, you want to post-process data. Maybe you think, you are doing a mix of different sources to get a better view or put in your own overlay whatsoever. So that is really, really important, and that's the biggest challenge still, I would say. So happy if Energy Exemplar can provide some more. Yeah. So it's yeah. So And this is our setup, so of course you need to model all these, right? So what is the regulatory frameworks? You have to also think a lot about the weather. How do you input weather, right? So load is also getting more and more complex. Data center, AI maybe, especially on the longer term. Short term also, okay, how much demand do we really have? Is there more demand destruction or is there demand recovery? Currently, I would say demand is underperforming. So currently, unfortunately, I must say I'm more on the destruction side. Well, let's see. Yeah, and it's really tricky. So grid bottlenecks, right? I think also David said it's a problem, right? To cope with the renewable feed-in, you need much better grid infrastructure. You need have a view on the commodities, and then also kind of on the capacity growth of all your kind of generation kit. So, but if you have all this, and if you're happy, then of course you can run it, and then you get hourly kind of prices, hourly whatever you want, right? Fuel burn, which you can also then use for your gas modeling, or carbon burn for your carbon balance. You can look at your dispatch. You can do all kinds of sensitivities, scenarios. Of course, yeah. I think clear. That is what you want to do, right? But okay, what are the challenges right now, right? First paragraph is really currently the choppiness of the market, right? So it's really headline and tweet driven. No? So as you know, sometimes you get a tweet from Trump, and in the afternoon it's the opposite, or in the European hours, and in the evening or night it was different than what he said midday or something like that. Market is behaving, right? Behaving like this. So do we have now tariffs? Are we now in a negotiation phase, or everything so disappointing so that whatever. So this is really a problem. Same also, of course, Ukraine, also a lot of tweets. Is there really something happening there behind the scene? So it's really difficult. So all the geopolitical and macro news flow is pretty challenging right now. Regulatory changes. I think the most important one we had was the storage min fill level relaxation, what I talked about earlier. But there might be also other ones, right? In the US, of course, it is how the whole kind of delegated acts are kind of impacting the IRA. So this is, of course, also causing a lot of investment uncertainty. And then also behavior of financial players, right? Is it for them are they leaving the market? Are they building up positions, especially for carbon? That's as I said, a very important point. Then if you are coming more closer to power modeling, power fundamentals, so constraints, right? Cross-border constraints. So we had now, again, a lot of some constraints regarding the French eastern borders. So, but what will it mean for the future? Will they be always there in summer? So nobody knows exactly. And of course, they are embedded in the context of the flow-based market coupling in our kind of CWE markets. Hydro situation, I don't know, maybe we are not a Scandinavian company. I hope the Nordic companies can do it better, but of course, it's also tricky. And we also saw, of course, we had this very dry phase in May, especially also southern Scandinavia, Alps. Now, of course, it relaxed much over the last kind of what is it, like 14 days or something like that. So that's always tricky. As I said in the beginning, so a lot of generation is embedded, so which means you cannot really observe it, right? So there is the transparency is missing. So as I say, okay, we have 100 gigs installed of PV, but the max feed-in was 50. So where's the rest? Of course, some are maybe, the big ones might be curtailed, some have not the right angle, but of course there's a lot also is not really metered. It's embedded in the load with also batteries. And also smaller generation units like engines. Then a flexible generation, how to cope with it, right? So ramping starts, it was always a problem also before to get that right. But of course, the impact or the steepness of the kind of length is not now much more. And also availability, of course, yeah. What do you do with the nice kind of transparency announcement of some generator? Do you kind of, what do you do with it? Do you put kind of unplanned unavailabilities on top of it? Of course, it is what is always the art of modeling plant availability in the future. And then also commissioning, right? So like our nice nukes, or the new nukes in France, or also in Finland, maybe now also the one in UK. So they had heavy delays. So also, of course, that is also always interesting, and to have a view on that. Renewable penetration, you have to have a view on the capacity growth, and also how do you kind of model the utilization, right? In the end, of course, you cannot just put in a normal kind of pattern, then every day looks the same. So you want to have really days with high and with low kind of wind and PV. So you want to kind of model a normal feed-in pattern. And that is, of course, also, I think there is no standard recipe for it. So, but this is also something you have to get your head around. And then also how to kind of combine it with weather forecasts or scenarios. Do you run historic weather years, whatever you are doing, right? Demand was super boring, like 5-10 years ago. It was like Germany was like, okay, it's maybe like 1%, 2%, nothing really happening. But now, of course, it's not, right? So we had COVID, right? There was a lot of destruction. Are we now seeing recovery? Are we seeing industrial migration? As I said, especially energy-intensive industries. What is happening kind of with the kind of electrification? So, of course, the kind of e-mobility path is a little bit slower. Heat pump, big kind of controversial debate in Germany about the law, the heat pump law. So how fast is this progressing? Industrial processes. And then also in the long term, data center and AI. I think in the US, everybody's only talking about data center. Of course, they have also, the impact there is definitely much bigger. So, but of course, currently, I think it's also a bit hyped, and you have to take it all with a pinch of salt, what is really then coming out. And then altogether, this, of course, is also difficult how to capture these extreme settlement prices, right? So price below zero is difficult, right? It's not a fundamental price. Of course, you can do something. You can say, okay, there is surplus. So, but what is really then coming out? Is it -10, -50, -100? This is then tricky. And the same also for the steep flanks. So when we have prices above kind of 200 or 250 euros, so will it be then 200? 500, 800. So this is of course also something in, Maybe on the average you are right, then it's good, right? Maybe you can trade then the base product and so on. But of course it depends on the month and what is really happening there. Yeah. Okay. Yes, I think. Thank you. Don't know, time-wise? Good? Questions, maybe? I don't see so much.
Thanks for your detailed overview. I just have two questions, one on gas and the other one on power. So on the gas one, so you mentioned a good overview, but regarding the unbooked gas capacity in Germany. Germany being the highest storage volume country, and still I think we are roughly 7.7 BCM unbooked, 1/3 of the capacity. How do you see that, considering the spreads and the failure of the auctions?
So I think you are right. There's still some capacity unsold. I think now the economic picture is better. I think we are still not reached kind of the end of the time threshold, right? So we still have some time to fill them up before winter. So I think there are ongoing auctions as long as I know, and I think some of them will be filled, right? And I think currently what we see is that the new kind of fill target is 75%, which is also a little bit different by country. They have a little bit, some countries have to do a little bit less, some a bit more. It depends also on the ratio between the storage capacity and the gas demand. So I think that should be not a problem, the kind of new, kind of relaxed kind of regulation.
So you think we'll get there in
Yes.
Germany? Yeah? Okay.
Yeah. Not true.
And the other one on power, so you mentioned the gas capacity, right?
Yes.
The new government. How do you see the hydrogen development? Because RWE is also invested in the hydrogen. Do you see any big capacity power plants coming online in the next 3 to 5 years in Germany?
Yeah, so hydrogen, of course, the economics of hydrogen didn't get better, right? So, so we saw some first projects. So also we are big into one project, right? So this is, I think, ongoing. But of course, the future, we have to see, right? It depends on a lot of things. How kind of also regulation will change. So you know that, I hope they relax a little bit. I think some things already happened, but of course there needs to be more incentives into hydrogen to make that really economic, right? And also to take the risk from players. And that's also the problem with kind of the current kind of macro environment. We need more investment security, right? Because it is with the gas capacities, we have missing money, right? So the fixed costs are not getting remunerated by only the market price. And therefore we need the industry needs some incentives.
Okay. And one point which I don't see at the moment, popping up on the trading floors, do you see, as in Germany we have a lot of renewables development, right? Inertia being sold as a product down the lane, because when we have a lot of renewables connected, then we may see conventional generation going down in Germany. We have a lot of these redispatch problem already in Germany. Do you see inertia being offered as a service on the market down the lane?
This is a very special question, so I'm not sorry, I'm not the kind of inertia expert. I think this is I think a question for the grid operator, right? So sorry.
Yeah, all good, thanks.
I don't know, I can't.
My name is Ulla Peterson, Pieper Energy Management Consulting. Thank you for a very nice presentation. I would like to ask you about nuclear. Most of the countries around Germany have now changed their policy or are discussing to changing it. I think it's only Austria left. In case you would model something for 20 years and would estimate that there might be nuclear in Germany as well, would you estimate them to be on the same locations as before? Or do you think that the landscape has changed so much so it will be entirely new?
Tricky question. So
Yes.
especially I think for Germany, I think, So I think I would say all German operators or who used to be operators of nuclear in Germany are not really keen, right now, because you need this certainty and also this kind of acceptance from society, which I think especially in Germany, I would say it's not. It's maybe in part there, but not overarching, right? So I think what you said, okay, makes sense, right? Because you should always, if I could model whatever I want, right? So of course I could place a lot of nukes in Plexos just to run a sensitivity. Of course it makes sense from a kind of system perspective to place them there where they used to be, right? Because there you have the grid connections, right? So the brownfields and you have the infrastructure there, and also they were built. Maybe you would not build them too much in the north, right? Because there's a renewable penetration in Germany, maybe more in the south. So, which is clear, right? But of course, they were built there for a reason, right? Because there were already the sites there. But I don't see it currently happening, right? So don't understand me wrong. I don't know who was over there.
Thanks, Thomas, for your presentation. Paul Dean, University College Cork. Let me give you an easier question.
I hope
Mario
so.
Draghi's report in February pointed to the price-setting influence of natural gas in Europe, generating 20% of our electricity, but setting the price 80% of the time. What are your thoughts on the merit of restructuring electricity markets in Europe to remove the price-setting influence, or reduce the price-setting influence of natural gas?
Oh, that is not an easy question. So yeah, that would be an absolute fundamental market design shift, right? So we are all aware of that, and I think the kind of what it all means beside that would be so immense that I think currently, okay, the system is working, and it's still working, right? Okay, a lot of people were saying it will not work when we have such a high renewable penetration, but still it is showing the right market signals. Right? And still, I'm not convinced that if you would change something, that you will help then, because then you need the market price signals, right, for the right kind of investment behavior. We see now, we can now calculate, okay, if you now want to invest into a new gas plant or a hydrogen-ready gas plant, how much missing money you have, how would you do it before? I would see then a lot of kind of regulatory interference, and that is always the problem, right? So as good as regulation always is, right? So they always want to, of course, improve system or increase the kind of system welfare, or I don't know how you describe the objective function. But then it's always they are kind of introducing a regulatory measure, and then they are seeing, okay, it's not working like intended, right? After 1 year, 2 years, and then they are putting a layer on top of it, but they are not kind of rectifying the old mistake. So, and then you are getting a very complex system, and that's what we are seeing increasingly, right? That regulators are putting regulation on top of another regulation to kind of maybe make the first one a little bit better, but in the end it makes it all much more complicated. So I'm not a big fan of that, to be honest. Yes, one more? Oh, okay, sorry.
Hi, Bartosz Zagórowicz, PSC. I want you ask a question about details on Plexus forecasting model. So could you share us the training and test errors that you have on the price on this model?
No, that's proprietary, sorry.
Or maybe order of the magnitude, something like that?
I don't have it currently. It's changing, right? Sometimes you have, it is always, as I said, right? You have to really be very mindful. We do daily runs. You need to kind of do backcasting. You need to do error decomposition. You need to kind of then try, okay, where do you think where's the need to change something on the input side, on the modeling side? We run it. So of course we want to minimize it, right? So, but of course you have model errors, you have forecast errors. And it's clear that you always will have forecast errors, right? Because nobody can really forecast how the inputs. So, and of course that is then the challenge and the art to kind of do it in the best possible way. Have good luck. Thank you. Here. Oh, there. Oh, yeah. Sorry. Oh.
Hi, thanks, Thomas. Sean Jones from Siemens Energy. I'm interested over here. Hi, the other side.
Oh, sorry, the lights are so bright.
Yeah, from Siemens Energy, we're an OEM, global OEM. I'm interested in your point earlier about challenges in market forecasts, particularly about asset deployment, renewable deployment, and how you might consider constraints in the supply chain. So manufacturing limitations, for example, in the deployment of long-term forecasting.
I think that you are the expert, right? When you're from Siemens. So of course we are updating our inputs, right? So I think tricky, right? So supply chain is a massive issue, and we see it in rising capital expenditure, right? So hope that Siemens is getting that also better under control, so that the capex is not rising extraordinarily, right? So of course it's and it is always, of course, if you are modeling how of course, we are talking to our own developers maybe, we are looking at what kind of other people are saying. It's difficult to find kind of the right answer. What is the average capex for a new gas turbine, right? So, and also in practice, every site is a little bit different and you need to model something in there, right? So, but you have to make your best estimate of it.
Thank you.
Now finally.
Thank you. Julian Visser from Monaco. I have a question with regard to your modeling choices. You do fundamental modeling for the forward curves, basically. But as you pointed out in your presentation, the forward curves are super volatile and mostly volatile due to financial advisors or investors and political discussions. Why still model fundamentally and not just move away from fundamentals and purely tweet-driven modeling?
Yeah, of course, you could try so, but of course the fundamental anchor is always kind of what you have as a basis, right? And then of course, that's also our pinch of salt, which we present to the traders. Of course, they are always looking at the screens, they are always kind of following the news flow and then kind of also doing their kind of take on that, right? Are they now kind of markets are overreacting to a certain kind of event, to a certain kind of information flow? And I think our responsibility as analysts is to have a lot of kind of insight in the drawer, kind of have a lot of sensitivities ready, and then also kind of if something is really changing and we think that should be kind of promoted to a base case or is worth a scenario, then we run it and say, okay, that is the impact, right? But it's really tricky. How do you kind of then model kind of tweet-driven trading? So I think there's all kinds of AI kind of systems, of course, or also systematic traders, but they usually spread it over a large portfolio usually. Okay, you should of course try all possible approaches, but still I think fundamental modeling is still something which you should do, right? To have also kind of what is then kind of your basis and what is kind of might be a kind of an over acceleration or under kind of acceleration of the market. Okay, are there more questions? Good. Thank you.
Thank you, Thomas, for those timely insights.